Let's take a look at some of the big news in crypto this week. I would say one of the bigger things in crypto this week is that the LIDO protocol has started allowing people to withdraw their staked Ethereum. So let me give a little bit of backstory to what that means and why this is significant. Ethereum is obviously it's the second largest cryptocurrency network next to Bitcoin, and it's also the crypto network on which most of the decentralized finance scene takes place. That's where all the trading happens, all the on-chain stuff, Uniswap, Compound, money market protocols, everything that people do in cryptocurrency is rooted in Ethereum. Ethereum itself, like Bitcoin, used to be minted into existence through a proof of work mining where people would run their computers and then use that computer power to earn Ethereum tokens. They've shifted to a proof of stake version where now instead of running computers to support this global network, people are taking their existing units of Ethereum and locking them up to help secure a validation network of nodes. And basically the only way that a node can add information to this blockchain is if it has support from enough of a token stake, and therefore the security comes from the people who actually have vested ownership of these tokens, making sure that, the progression of the blockchain is on the level, because if it isn't, then the value of their tokens becomes worthless, because immutability is the thing that Ethereum brings to the table. Anyway, when that shift happened from proof of work to proof of stake, you maybe have heard about it in the news where, the carbon footprint of Ethereum, or the amount of electricity it takes to run the network, was cut by like 99%.
Right.
It now takes very, very little electricity because it isn't, running a bunch of computers. It's just people interacting through software using their tokens. The tokens that you use to stake to help secure the network, you receive a reward for that. If you participate in this staking economy, you can earn a percentage of yield basically for doing so. But doing that transaction where you take your tokens and you stake them was a one-way transaction, meaning that if you have, say, 1 Ethereum and you decided to stake that Ethereum, there is no function, or there was no function, to unstake it, making it liquid again and making it possible for you to sell. So because this was such a one-way kind of a ticket, for your assets, there was a protocol that was deployed on the Ethereum network called LIDO, which allowed for liquid staking. So what you would do, the way the protocol works really quickly here, I won't get too into it, but the way it works is you would take your Ethereum, and instead of staking it in your wallet and, having it locked indefinitely in exchange for some return, for the stake rewards, instead you would take your Ethereum and delegate it to the LIDO DAO. The DAO standing for Decentralized Autonomous Organization. So you would stake it through them. They would stake it, and in return, they would send you a token called SETH, like staked Ethereum, or ST, I believe it is, STETH. Right. So now you have in your wallet STETH, and STETH represents the position that you have staked through the LIDO protocol. Of course, there can be no way to unstake your Ethereum. And so now you still have ST Ethereum. There exists liquidity on the blockchain for ST Ethereum against regular Ethereum, so that you can trade out of your staked position, even though you can't withdraw it. Anyway, in the last couple of weeks, Ethereum had a major network update that added the ability to unlock staked Ethereum from this, staking network. And right. This past week, the LIDO protocol updated their operation as well. So now people who own STETH units, instead of just trading them back and forth between Ethereum on a decentralized exchange, you can now redeem the staked Ethereum and pull back the Ethereum that is actually staked back into your wallet and make it liquid. The implication of that is that there's a lot of Ethereum units out there that are participating in this staking process and have been for years. And they've also been earning, interest for years. I think it's around 5 to 10%. It fluctuates, but I think you can expect like 6% or so when you stake your Ethereum. All of that Ethereum that's been locked up for years and years, part of it at least, is now available to be withdrawn and made liquid again. So there is now a much larger portion of the Ethereum circulating supply that actually is liquid that previously was not. It was previously stuck in this staking contract, which was one way. So this week, that's the big takeaway. This week, LIDO is making it possible to redeem STETH for Ethereum directly again. And the implication of that is that it makes a lot more liquid Ethereum available to the market, meaning that there may be more sell pressure on Ethereum than there previously could have been, because there now is more Ethereum liquid and available to traders than there previously was. These events were known. This isn't like a surprise. So this is priced in to a degree. Like, people aren't like blindsided by this, but it is an important, distinction between understanding something is happening and it actually happening. So, we're now in the actually happening part of this process, and we'll get to see, in the coming weeks how this is going to affect the market. Ultimately, I think the main way to play this is keep your eye on the DXY. If the DXY climbs, then Ethereum is probably going to fall. It's not, like I said, the event itself of these Ethereum tokens becoming unlocked, that's priced in. So it's very interesting to note, but I don't think it's an event that people should be using as a catalyst or as an excuse to sell a position. I think, as always, the best reason to take positions is the chart. Follow the chart.